Today, I want to talk about how short sellers have been left living in fear of AMC, with some shorts like Andrew left of Citreon Research even scared to go outside. I want to explain why these shorts are scared, and for any shorts that aren't scared, I want to explain why they probably should be. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, StockSense Frank tweeted saying the Justice Department closes in on short sellers. FBI agents raided the homes of prominent shorts last year. Now criminal charges may be imminent. Bloomberg have said that anxiety over the Justice Department's investigation intensified several weeks ago, when the head of its markets integrity and major frauds unit predicted at a legal conference that the public will start seeing results within a few months. The head of the Department of Justice Frauds Unit didn't elaborate, but since then short sellers have buzzed over who among them might be in the crosshairs. Bloomberg said 2 years after FBI agents showed up at his California home to seize computers and phones, the short seller who terrorized more than 100 companies and riled an army of meme stock traders is describing what it's like to feel hunted. His pioneering firm, Citreon Research, no longer has investors. He's all about stopped pitching ideas publicly, and he's even wiped his once feared Twitter account. The Department of Justice hasn't yet brought any allegations against Andrew left, but his short positions have already cost him dearly. He took massive losses shorting GameStop in 2021 and finds himself ostracized in the industry and personally. And Frank said that he expects to see criminal charges filed against some or all of the subjects of this probe within the next few months. He said the government takes its time, but when it hits hard. So this comes from an actual Bloomberg article, which is this one about short seller Andrew left being left living in fear of the feds. It's crazy to see that some of these short sellers have been left living in fear so significantly that some of them are even scared to go outside. And it's also interesting that these shorts are buzzing between themselves who exactly is in the Department of Justice's crosshairs. I think especially now that Bloomberg have released this article just a few days ago on the 11th of July 2023, I think the Department of Justice announcement is edging closer and closer. Obviously the answer for these short sellers is to not do or stop doing illegal things, and then they won't have to live in fear so much. Not only would they not have to live in fear of the Department of Justice, but they also wouldn't have to live in fear of retail investors if they're not doing anything illegal. Shorting companies legally or going long on companies legally is absolutely fine, because then the market is free and fair. But when certain illegal practices that are only available for some market participants, like those illegal short sellers, start being used, all of a sudden the market is no longer free and fair. I think as this Department of Justice announcement edges closer and closer, we're going to see more shorts being scared, but also more shorts being so scared that they stop that illegal shorting. I'm sure there's obviously going to be some short sellers that believe they can outsmart the Department of Justice that will continue, but it's likely these short sellers will be the ones being caught. And I'm very much looking forward to see exactly what punishments the Department of Justice starts issuing out to these illegal short sellers. Because don't forget, it's not going to be the same monetary punishment that the SEC can issue, like a small $50 million fine. The Department of Justice dishes out jail sentences. And we can see that some short sellers are not scared of this Department of Justice investigation, but are scared of AMC itself. Roth MKM has suggested the AMC Entertainment shares are still trading at irrational valuations. Roth MKM obviously believes that AMC should be bankrupt or trading below $1 per share, or whatever their target is. Now Matt tweeted saying it's interesting that shorts think AMC should be valued below $1 per share, but those same shorts are the ones paying $76.83 per share to short AMC. Obviously, if you take the current share price of AMC plus APE and factor in that 1000% cost to borrow fee, these shorts are paying $76 per share each and every year to short AMC. It's funny that analysts are the ones saying AMC is overvalued when these shorts are paying 10 times their position just to continue shorting. And obviously it's not because they're choosing to pay 10 times their position to short, it's because they're forced to pay this amount because they're stuck in their short positions. Stuck until the Department of Justice comes along and frees them from their positions by imprisoning them. Also guys, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward, which you could use to buy more shares of AMC, GameStop or of APE. stock. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying deposit. Signing up to Moomoo is free, it just requires a temporary deposit, it doesn't take too long, and it's a great way to support me and to support the channel. If you just want that $100 cash reward and 5 free stocks, all you need to do is deposit $100. If you want more free stocks and a guaranteed free share of Tesla or of Google, just make the required qualifying deposit. And these shorts are likely scared because the second quarter 2023 earnings season kicks off with BlackRock in just about an hour, with 3 of the big banks thereafter. JP Morgan, Citigroup and Wells Fargo should shed some light on the state of the economy, consumer credit and banking stability. BlackRock, Citigroup and Ericsson are all expected to produce negative earnings results. And it will be interesting to see just how many other major banks also produce negative earnings results and which banks announce massive losses. It will be interesting to see just how much these banks are struggling at the moment and which bank is closest to collapsing next. Because obviously as we get more and more banks collapsing and more short sellers getting closer to their margin requirements, we start seeing more and more margin calls. And obviously if we start seeing Bank of America, who currently lost over $100 billion, experiencing those margin calls, we're likely to see stocks like AMC and GameStop starting to squeeze. Bank of America works very closely with Citadel and therefore likely also holds AMC short positions and even lends the majority of Citadel's margin. And therefore if Bank of America themselves start being margin called, they may end up recalling loans that they've dished out to Citadel, effectively forcing margin calls upon Citadel as well. And Wall Street Apes tweeted saying here's Tucker Carlson interviewing Andrew Tate. And Tucker says, wouldn't it just be easier to create a fake cryptocurrency, call it FTX, and steal billions of dollars from retail investors? Which is effectively exactly what Citadel and FTX did, creating those scam FTX AMC tokenized securities. But he also said, did you notice this ape in the background absolutely covered head to toe in cash? This statue of a cash-covered ape was actually central to the interview the entire time. Now you may also remember that video of Andrew Tate speaking about bankrupting hedge funds that are currently shorting GameStop and AMC. He himself bought a few $1 million worth of GameStop and AMC shares during January of 2021. Andrew Tate has expressed multiple times his dislike for the system and his dislike for those hedge funds as well. It wouldn't surprise me if this is indeed a sign that he's still holding those GameStop and AMC shares and wants more people to see the apes as well. This interview will be watched millions and millions of times and has already been watched millions of times, so that's millions of new people learning about cash-covered apes. On top of that, I think another reason as to why these shorts are scared is because the highest cost to borrow rate for AMC ever was back in April at 979%. Right now it's already 977% and still going strong. Back in April, this sky-high cost to borrow fee only lasted for 3 individual bars. I'm not sure if that's 3 days or 3 weeks, but we can see the current cost to borrow high fee has already lasted for numerous bars already, and is still going. That's why I've said multiple times I expect AMC's cost to borrow fee this time round to hit upwards of 2,000, 3,000, if not 5,000%. Finally, Charles Payne also tweeted saying, today, in my take, I'll take on the shorts and publicly ask Gary Gensler for an update on MMTLP. Gary Gensler said, or asked, or demanded at the end of his show, saying, hey Gary Gensler, look into MMTLP. It will be interesting to see who the SEC charges next with their illegal short selling practices. It will be interesting to see if they go after just another small firm that doesn't have any relation to AMC, MMTLP or others, or if they start going after the big guys for illegally shorting AMC, GameStop and MMTLP, or if those big guys are actually being left to the Department of Justice. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.